And Egypt's woes ongoing. I've pulled up a chart for our viewers as well to again get a sense of the latest numbers in terms of foreign currency reserves, down to the lowest level since March 2015, an 11.45% drop in the month of July, $2 billion straight off the top. As Egypt continues to negotiate with the IMF, how does it find a way out of what appears to be a growing crisis?
Yes, you're right. I think that Egypt doesn't have the luxury to wait any longer. The Egyptian pound is under tremendous pressure. The local currency is trading with a massive discount on the black market, 40% below the official rate. And as you have mentioned, the foreign reserves have reached $15.5 billion in July, which means that the total cover import is now below the critical level of 3 months. And the outlook is not great. If you look, for instance, at tourists, a key provider of hard currencies for Egypt, they are still avoiding the country. The country might lose $4 billion of tourist revenues this year.
That may be the case, but you look at Egyptian equities and how they've performed, and they are still, in terms of price returns, the leading index in the Middle East. How do you reconcile that? Perhaps there's a view or a play that Egypt's on the cusp of a turnaround if they do come to an agreement with the IMF. Can you buy into that view?
Yes, I think we have seen a lot of local investors taking some positions recently. The figures that you have mentioned is in local currency. If you look in dollars, I think the performance will not look as good as you have mentioned. And we know that some sectors might benefit a lot from this devaluation. I'm thinking, for instance, for real estate. A lot of investors would love to take an exposure to this sector who might benefit from this devaluation.
Well, does Sebastien is rich in Hong Kong? Does devaluation present a buying opportunity? That's the question.
It's too early, I think, to buy now or to enter in Egypt. We need more details because the IMF agreement is, I will say, only one part of the story. We need more. This agreement might trigger some positive news for the country. Egypt might come back on international markets to raise money. There is a planned Eurobond issuance for $3 billion, and other international institutions such as the World Bank or the African Development Bank might support as well the country. But I think it's too early at this stage. Don't forget that there are also some negative impacts with this devaluation. It will trigger a lot of inflation in the country. And in Egypt, 40% of the population live below the poverty line. So you might have some social discontent in the country, and the government will have to deal with that.
Well, what about economic policy? That's going to be key here, despite what the IMF says. The thing is, what are the fundamentals of the Egyptian economy, and does Egypt need to, in a way, also change its motor of growth?
Yeah, definitely. The IMF is coming with good reforms, I think, related to the introduction of new taxes such as VAT, and at the same time they want to cut subsidies, especially related to energy and to food staples. The President Sisi had already done a first move when he came in power 2 years ago, but more is required. Don't forget that the budget deficit is roughly 11 or 12% of the GDP, which is a very, very high figure.